Hey everyone, so it is Wednesday, November 16th, and I just wanted to talk about the key events that led to the collapse of FTX. There's no way you don't know about FTX by now. It basically became insolvent, filed for bankruptcy, and there's been ripple effects across the industry. $200 billion wiped off the map from the total crypto market cap. Okay, so that's 20%. And this is very reminiscent of what happened with Terra Luna, right? The crypto lost its peg, right? And then Luna's price crashed. There were insolvency issues, mainly because companies mismanaged their risk, right? Started with Three Arrows Capital, and then that had a ripple effect across the industry. FTX, in this case, also mismanaged funds and took really risky bets, and people have to pay the price for it now. A lot of people lost their money, people are losing their jobs. And just to give you a very high level chronology of events, Sam Bankman-Fried started Alameda Research in 2017. That's a trading firm slash hedge fund. And then after becoming successful, mainly because exploiting arbitrage opportunities with Bitcoin, started FTX. And FTX is an exchange, and Binance is an early investor of FTX. So CZ, the CEO of Binance, and Sam have a complicated competitive relationship. And FTX ended up buying out Binance. So Binance received $2 billion. A large portion was in FTX's token, FTT. And then Alameda Research, started mismanaging funds, taking out big loans. At some point, CZ became suspicious. The Alameda Research balance sheet was leaked. And that's probably partially why he got suspicious. And I think it was also noticed that FTX transferred $10 billion at some point. So, there was suspicion out there. And CZ announced on Twitter he's going to sell, all of the FTT token, which is already illiquid. And so people panicked and sold off a lot of it. And that crashed the price. And then people became suspicious about liquidity issues within FTX. And they started withdrawing their funds. At some point, they couldn't withdraw their funds. It became clear that FTX lent out customer funds to Alameda Research, basically to prop up the firm. And he lied about it. He specifically on the tweet said that they don't loan out customer assets. He also said that in a CoinDesk interview. And so it's unclear what specific law was broken, but this is definitely a fraud issue, not a crypto issue. And I know a lot of naysayers and, anti-crypto regulators in the government will take advantage of this. But, I hope that everyone sees through that fear, uncertainty, and doubt that is injected in the media, because actually DeFi specifically, decentralized finance, can solve this very issue that happened with FTX. And with My Digital Money, we help solve that, where you can still do business with a centralized exchange, but get the extra protection that we will not use your funds by putting it in a trust, right? So we put your assets in a trust, and that helps prevent and basically it kind of separates, instead of commingling your funds with our business operations, it separates that, right? So if you're going to do business and you're going to invest in crypto, which has a lot of promise still long term, no, Bitcoin is not going away, then do it in a safe way. So yeah, I just wanted to give you that background. Thanks.